What's up everybody, Jaspreet Singh here, and the last few days in the economy and the markets have been very interesting, and there's been a lot of false information spreading around. So I wanted to make this video to clarify a few things, because many of us probably have seen that first Treasury Secretary Janet Yellen came out and said that she was wrong about inflation and how bad inflation is. After she said that, you had Jamie Dimon, the CEO of JP Morgan Chase Bank, saying that we have an economic hurricane coming our way. So essentially start preparing for that. And then Elon Musk came out and he said that he has a bad feeling about the economy, and because of his bad feeling, he says that not only is Tesla going to be doing a hiring freeze for the white collar workers, they're going to be hiring in the manufacturing side, but for the white collar workers, but they're also going to be laying off about 10% of that workforce. And as soon as he did that, President Biden responded to Elon Musk. He said, well, Ford is hiring, Chrysler is hiring, they're ramping up their investments. So good luck on your plan to the moon, essentially your plan to Mars. So it was an interesting kind of going back and forth. Somebody's going to be wrong. Now the question is who? And what I want to do is I want to start by talking about what's going on the government side of things, because I haven't talked about this too much. Then I want to go into the business side, economy, markets, and then kind of the things that you need to be aware of. Because on the government side, the interesting thing is right now, the United States government has like $30 trillion worth of national debt. Now, the interesting thing about this national debt is the government has to pay this money back, plus interest. And when you have this sort of high inflation, it actually benefits the government. The reason why it benefits the government is because when the government has inflation, when we have inflation, that means the government can pay back this $30 trillion worth of national debt with cheaper dollars, right? Think of it like a home. If you bought a home for $500,000 and now you're seeing all this inflation happen and your payments haven't changed, well, that $1,500 or $2,000 worth of payments that you have every month is going to feel less painful if your income, assuming your income, is growing significantly every single year. By the way, the reason why I'm wearing this coat is because I just came from LA. I did an interview with Tom Bilyeu at Impact Theory that's coming out soon. But going back to the topic of the video, so the government benefits from inflation because then they get to pay back this debt with cheaper dollars. So it actually benefits them. However, now we're in a time where interest rates are going up. So the government, remember, they can't just spend money without having that money. Now, where do they get that money? They can get this money from taxpayers with tax dollars, right? You pay taxes. Or if they can't get enough taxes from that, then they can go to the Federal Reserve Bank and they can issue loans. They can issue treasury bonds. And then the Federal Reserve Bank can then print money and give that to the government. So that's what's been happening. The Fed has been printing trillions of dollars and lending it to the government, but now here we're in a situation where interest rates are going up. That means the payments on the government's $30 trillion worth of national debt are also going to be going up. So that means that in the future, the government's going to have more of its money, its revenue being used to pay down its debt instead of being able to use this money for its regular services. So the government does play a part in inflation in that sense, because when the government spends more money than it brings in, it has to cover that cost. It can either cover that cost with higher taxes, which makes people angry right now, or they'll cover that cost through inflation, which ends up being a tax, but it's a hidden tax and is paid for by regular people and people who don't understand what inflation is and how money works. And so it's very unfortunate. Some people will get hurt way worse than others, and the people that get hurt are the people who are financially uneducated. But that's what happens. And now with the payments going up, there's a higher cost for the government. And at the same time, it's not like government spending is slowing down. Actually, the government is still kind of ramping up their spending. We're seeing a lot more government spending going on. They want to find other ways to give back to people, whether it's paying off student loans, whether it's an investment in something else. If you spend more than you bring in, you got to cover that. And either you cover it through taxes or you cover it through inflation. And that brings me to the second issue that the government is facing, which is having to do with gas prices. I mean, oil costs. Just look around you. Oil prices are pretty expensive. Gas is expensive across the country. And it doesn't, well, as of now, we don't know what's going to bring gas prices down unless something changes, right? At the current trajectory, with everything going on with Russia and Ukraine and with the current supply shortages of oil, if nothing else changes, oil prices will continue to go up. And the tricky part here is right now the government is also releasing 1 million barrels of oil a day into our economy and into our system because they have that strategic oil reserve. And so right now the government is trying to keep the price of oil down with this extra million barrels of oil a day. Now think about that for a second. Our prices of oil are significantly high. Imagine what they would be if the government didn't do this million barrels of oil a day. Or actually imagine what would happen if we did run into a real energy crisis where we can't produce as much oil. Maybe things with the war get worse and now we're facing a real energy crisis or energy shortage. What would happen to gas prices then? Because what if that happens and we start depleting our oil reserves that the government is supposed to keep? So, this is something that you want to pay attention to because right now the government is releasing our strategic oil reserves to try to just keep oil prices down for the American people. But we're not facing the energy crisis, like an energy shortage that, potentially could happen if the war gets worse. And if that happens, again, this is like a worst case scenario. If that happens, plus, we deplete our oil reserves, then that could be a real energy problem everywhere in the world. So that's kind of what's going on the government side, the thing that you want to pay attention to, and which is why inflation is a real big concern and something that we don't know where it's going to go. You have some people saying that inflation is because of inventory issues. Other people are saying it's due to money printing. Now, it's definitely got both of them in there. The question is how much of it is money printing, how much of it is inventory issues, and we're not going to know that until it's too late. And that's how the government and the Fed work, is they're reactionary. And so you don't want to be relying on them. You want to make sure that you are staying up to date on what's happening. That way, one, you can make better decisions with your money, but so you can take care of yourself instead of just relying on the government, instead of just relying on the Fed, and instead of just relying on a random guy on YouTube to tell you what to do. My goal is to help you be educated. That way you can make smarter decisions for you, your community, and your family. So that's the first thing that I want to talk about. Now let's talk about the economy and markets. Now, by the way, if you want an easy way to stay up to date on what's happening with markets, the economy, from the stock market to the real estate market to the crypto market to inflation to what's happening in the global economy, you can check out Market Briefs. It is a free financial newsletter that I put together where my team breaks down what's happening in the top finance and business news into a fun, witty, easy to read email. It is a lot of fun. I promise you are going to look forward to reading this email every morning. It is such a fun read and we make it so easy for you to stay up to date on what's happening. So if you want to join Market Briefs, it's completely free. And I'll put that link for you down in the description below. So talking about markets and the economy, I'll just kind of give you an example. So, I work with a lot of entrepreneurs. I work with startups. I invest in startups. And over the last couple of years, we saw this big boom of startups with just ideas and hope. And the whole idea was, if you can have an idea and get a little bit of users, then you could raise a whole bunch of money, just because that was the game, that was the system. So you had a lot of these entrepreneurs that really weren't in the business of trying to build a product. They were just trying to increase valuations of a company. I'll give you an example. I can't disclose the company. I did not work with this company, but I had to sign a bunch of confidentiality agreements. But a company had an idea for a financial product. And they came to me and said, look, help us get to 10,000 leads, email contacts. If we can get 10,000 people signing up for our new product, then we can be valued at $2 million and we can go to a venture capitalist and raise a bunch of money at a $2 million valuation. And when I heard of that, it really didn't make much sense to me, because I was like, wait, 10,000 people? You just need 10,000 people to give you their email address and you can be valued at $2 million? Like, that doesn't make sense. Because even just on a practical level, if you just wanted to get 10,000 people to sign up for something, you just run Facebook ads or whatever. I mean, under 50 grand, you could do that. How does it make sense that, I could spend 50 grand on ads, get you 10,000 subscribers, probably even less than 50 grand, and now you could turn around and get a $2 million valuation? It just wasn't making sense. But this was kind of the environment where people were just looking at ideas, valuations, and when you had this cheap money, this money was getting thrown around like crazy. And that had built some of these bubble businesses, which essentially relied on external money. Money from investors, venture capitalists, money from banks with cheap debt. And so there was a lot of companies out there that were relying on these types of funding sources because they just couldn't sustain a profit themselves. But now in this environment where interest rates are going up and people are being more picky and cautious with their investments because they need a bigger return to justify an investment, well, those businesses are having a much harder time raising money. And some of those businesses are going to fail. And this is where, what's going to happen, because sometimes these companies have to go under, but it's painful because that means people lose jobs. You see layoffs, you see companies go bankrupt and more people get lose their jobs. And it's painful. However, we're in a weird economic environment where we're almost trying to desensitize ourselves from risk, where the Fed could potentially say, and the risk is we're seeing some companies really get hurt because of our economic slowdown. So we need to cut interest rates or do more inflation to help these businesses stay in business and grow. And yeah, that can help the economy grow quickly because now, hey, these businesses that have crappy products that can't sustain themselves can get a whole new flood of cash, but you continue throwing dumb money at dumb ideas. And that is not a way to build a sustainable business or a sustainable economy. And the unfortunate reality is when you have a credit-based system, which is what we have, where our system doesn't just rely on money, it relies on how much money you can qualify for. I mean, I'm not saying it's good or bad, it just is what it is. When you have these type of systems, bubbles form. When these types of bubbles form, they have to be released sometimes, meaning sometimes bad investments have to fail, bad businesses have to fail. That way the whole system can correct and rebuild. And when you try to just eliminate all risk, that nobody can fail, well, that's a recipe for disaster, because that means, sure, in the short term, nobody fails, but eventually that means everybody fails. Because, you can create currency crises, you can really affect the economy in many other ways when you create too much inflation, and then it becomes very hard to sustain or very hard to bring down. So that's a couple of things that you want to pay attention to. And, obviously there's different opinions about where the economy is and where it's going. The government has its own opinion. CEOs have their own opinion. Economists have their own opinion. And, each one of them come from a different perspective. Like CEOs of businesses are not economists. They're not in the job of trying to predict what's going to happen in the economy in 6 months. They're just looking at their cash balance today and how much they're trying to grow by, right? And an economist, they're going to have their own biases. I'm sure I have my own biases. I try to remove them as much as I can for the videos that I talk about. But this is where, my goal is not to tell you, again, what to do. My goal is to help you be aware of the different things that are going on. That way you can make better decisions with your money, because anytime you see these sorts of economic shifts, some people will lose a lot of money. Some people can use it as an opportunity to build wealth. And my whole thing is really just to spread some sort of financial education, because these are things that were never taught in school. And while money management and financial education is never taught, these basics of economics and how money works are really never ever taught. And we're going through a weird transition where we've never really seen, well, most of us have never seen this type of inflation in our lifetimes, unless you were around in the 70s and the early 80s. Most of us have never experienced this type of inflation. And so what's going to be next? Are we going to be able to control inflation? Are we going to enter an economic slowdown with high inflation? Will we see stagflation? So these are things that you want to pay attention to. Just start taking better care of your money. Live below your means if you can. You have to live below your means. Put some extra cash aside so you have money to invest, create investments, own assets. This is more important than ever for you to now really start taking care of your money. That way you can take care of yourself, your family, your community. If you enjoyed this video, you should watch my video on the 5 biggest lies that you've been told about money. I think you'll get a lot from it. And you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. If you make $1 million as an investor, guess what? You get to keep more than $700,000, between $700,000 and $800,000.